you go ahead and take care of it. I'm just
One
kidding.
job.
Apparently,
one job.
logistics says that I have to stream our service. So thanks, Ryan, for the reminder. All right, done. Fine. Are you happy now? I am.
Yes,
Actually,
very. Carry on.
no, I just totally spaced it, dude. That's all it is. It's Wednesday, and today is one of those days. It's a Fed day. I went to bed early. I went to bed I went to bed an hour early. Guess what? I got up an hour early. That's the normal. That sucks. It sucks. And Kman's like, yeah, you need to adjust your clock or your internal clock. And I'm like, yeah, it's just not adjusting. I try, and it just didn't work. Anyway, doesn't matter. But you know what? We've got a lot going on. Like I said, it has been a massive amount of moves. In the markets, we got the Fed, we got the Bank of Canada, we have earnings, we have Tesla, Microsoft, Meta. Real quick, before we even get in, well, I'll go to those a little bit later because we just had earnings from Starbucks, and matter of fact, all the earnings this morning, pre-market, they all look good. I'm looking at all earnings, pretty much beats across the board, and futures are, they're holding up right now. They're coming off their highs, but if you can see here with this rising trend line, we hit new all-time highs overnight. We were expecting that. We were expecting that we'd see a move, to test the overnight highs. We wrote that last night, and break above 70-10 could trigger some buy stops. It did. But we've seen it come off just a little bit since then. And this is the Fed day. I don't think today is going to be a really big day as far as the Fed goes. We were just having some discussions in the chat room, about Moran. I mean, we all know that the Moran is going to be the big dissenter. The question is, are there going to be other dissenters, and why? The question I would have is, if you see a dissenter from the Fed, especially if it's Waller or Bowman, you got to be asking yourself, okay, are you dissenting because you want the job, or are you really dissenting because you think the Fed should be cutting rates right now, as we're still taking in data? What do you think about that, Ryan? I mean, if Bowman or Waller come out, and just so everybody knows, they are climbing the rankings of the next possible Fed chair. What do you think?
Yeah, I mean, I think it's a bit late for all that. Either they're in with a chance or they're not in with a chance. I don't think dissenting today is going to change the course of action for who Trump's going to pick. The question will be, why, like you say, why are they dissenting? It's not going to be on getting the Fed job. It's going to be because they see something in the data that they feel they need to stand up for a cut on. So yeah, I don't see anything that really should change the picture. The economy's done nothing that warrants a change in stance for anyone. So yeah, I don't think, if we do get a dissent other than what's his face, Mirren,
Yeah.
Then and it's more dovish, then yeah, you're probably going to get a market move. But other than that, I don't see anything coming from the votes.
Yeah, I mean, today's Fed meeting, it seems pretty benign. I mean, you would think, but you rose this, and guys, if you don't listen to the Flow show, I actually got to listen live this morning. I should have jumped on too with you guys just to say hello.
Yeah, should have done.
I was half asleep. I was like, I got up early and I'm like, damn it, I just need to go drink some coffee. So, but I managed to listen to your show live this morning. And if you guys don't listen to Ryan and Kman live, you can catch them on YouTube. You can catch them on X. I would suggest that you go here to our webinars page on the website and then sign up for the Zoom, because if you do that, you can actually interact with Ryan and Kman. You can ask questions. That's the best way, and plus you're going to get the best experience being on Zoom.
They can throw rotten veg at us as well.
They can what?
throw rotten vegetables at us as well.
Throw rotten vegetables. I mean,
Virtually.
the clarity of the charts are so much better too when you're accessing it via Zoom. But anyway, I digress. The thing is, you guys were mentioning on the Flow show about the risks or the what's floating around is that potentially Trump could try to upend this Fed meeting and announce his Fed chair this afternoon after the press conference or around the press conference. Do you think that's really a risk? I mean, we all know that President Trump's a bit of a showboater, and he likes to steal the spotlight. So I think the risk is there. What do you guys think?
The risk is there. There's two things. Obviously, this is Mirren's last meeting. So
AJ just said that too. Yeah.
Yeah, there's an opportunity maybe to put his Fed pick into that spot temporarily until Powell leaves. You wouldn't put it past him. You can never say no with Trump doing something like that. And if he has got his pick, then it's in the back of his mind. It's going to be, burning his hands wanting to let that out. And it's just a sort of stupid thing to do. I think it is low risk of it actually happening, but the risk isn't zero, and it never is with Trump.
Right. What do you think about that, Kman?
Good morning, America. Good afternoon, everybody else. I think it's a fair possibility. Why not? He wants to do everything to disrupt the current Fed and Powell, especially. So why not, man? Send out the truth bomb as soon as the first lines of the press conference are done, and preferably after he read from his prompter the statement. So right after, when so all the journalists over there will you will start to hear like a buzz in the room, say like, "Oh, have you seen this? Have you seen this?" And then the next 15 questions will be about that. So it's very possible.
I can totally visualize that. I mean, like, think about it. Like, the tension between Powell and Trump. I mean, being in the same room with those two guys, the tension would be so great. Could you imagine, like, he just takes the microphone and he said, "Good afternoon," and then all of a sudden Trump like releases this big truth social bomb. Like, sorry, I just imagining it. It would be funny, humorous, ridiculous, all at the same time.
Yeah, but it's you can't put it past him. Apart from that, it should be kind of an autopilot meeting, but I don't know. Bowman already hinted at that she's watching that all those employment and data, and we have seen more companies, Apple and whoever was it today. Amazon, I think, and then yesterday UPS. They all want to lay off people due to AI. Is there going to be a questions around that? The balance between jobs and inflation? That should be an interesting question, but because that would give us a hint for one of the next meetings. That is one thing. The way he reacts to it, and but apart from that, there shouldn't be any big surprises outside. No, I mean, not any big surprises concerning monetary policy, but the rest of the press conference is probably going to be about a load of other stuff.
Yeah, it's going to be an interesting one. And just when you think it's going to be a sleepy Fed meeting, I mean, it always happens like that, right? It's like you're like, oh, this is going to be nothing, and all of a sudden, this is where we get like a two big figure move out of like some currency or out of the dollar for whatever reason. Speaking of which, I'm going to come back to the euro here in 1 second. Let's take a look at the dollar index. The dollar index got absolutely smoked yesterday. Trump was talking to the Iowa farmers, and he's like, the dollar's doing good, meaning that it's going down, and he's happy about it because he said, I'm not worried about the decline in the dollar. And so, the dollar, and just so you guys know, and you guys can go into the trades room and see what I was doing. Yesterday, I was actually short the euro. I was short the euro, and then I flipped long at 119.97. I scaled out of it for 36 pips really fast. I mean, that was within literally. I typed it in. I got limited out. The break above 120. It was so fast. This move. And then obviously we were retraced a little bit since then, and we're back at the breakdown point in the dollar. But is the dollar, and I'm gonna ask Ryan this first, is the dollar overdone? I mean, a lot of banks are coming out defending the dollar today, saying this move is done, it's overdone. But at the same time, technically we're kind of breaking. I mean, we broke that 14-year trend line. We broken horizontal support. We're at lows that we haven't seen since 2021. I mean, this is the last time we were there at these levels in the dollar index. So how do you feel about the dollar right now, Ryan?
Same as I did before. Some of the reasons why the dollar's getting spanked is a bit nonsensical. Can it do more? Absolutely. You've got to be careful today because we're seeing the dollar performing a bit better. But is it performing a bit better because we've got the FOMC? Because I think potentially the biggest price risk is what Powell says or doesn't say about these dollar moves if he's asked. If he brushes it all under the carpet and says, don't care, or, not bothered about it, then maybe it goes on its way again, because you often get these periods when you get these risk events, the market's been pushing one way and it thinks, right, okay, well, Powell can do us some damage here. What are we going to do? We're going to lighten up a bit. We're going to wait to see what he says. If he says nothing, fine, that's a green light for us to continue. Conversely, if he does say something, then everyone's going to jump ship and the dollar rallies. So I think that's going to be where we get to see if this dollar move is over. By the end of the Fed, have we made fresh lows, or are we holding current lows and perhaps going the other way? So it's key what happens to the price action over this and where we finish after the FOMC.
I agree. This is really, really, this is the dollar just kind of sitting on a ledge, and whether we continue or not probably has more to do with, the reaction today following the Fed. Kman, do you have anything you'd like to add here with this dollar weakness that we've seen over the last 24 hours? The good news is if you were short the euro, your stops got cleared. So there's that, right? They got cleared above 120. But what are you thinking about this dollar right here?
My overall bias isn't changed. I'm still keeping some, but I've scaled down, obviously. The first move, the bulk of the first move may be done, but now we will have to see whether we start to have legs. The moves that we saw your afternoon yesterday, our evening yesterday, they are not natural moves and by that I mean driven by big money managers, etc., etc. It's headline moves, and we're back to where we were before, roughly. So I don't think a lot has really changed, but we've been speaking about this 115, 120 range. So we need to break, and if it really breaks, that means above 120 and holding, then we're probably looking at gradually moving into 123, 125. But I'm not sure if it's going to happen today. I personally don't think that the Fed should be, but the FOMC meeting in itself should be strong enough to reverse or to create another two big figures decline in the dollar. The F.A.C.E is not of the Fed's mandate. So yeah, it's really what the market thinks after Trump yesterday, and are we going to continue to sell the dollar? But all the other reasons why we are here are still valid to me. So I still think that selectively the dollar can drop a little bit further. I'm then in particularly thinking about stuff like the Aussie, which had a bit of a hotter CPI again, where the market can continue to trade on the Aussie on the beat side as well into next week's RBA. Euro, it should be a slower mover because we still have those European data which are not really telling us that we should be massively piling into euros either. So maybe the euro a bit of a slower mover. We're talking about those trend lines, and just the last word on that. We're talking about those trend lines. Yes, it's a big trend line, and depending on the pencil, it's around 119.75, 120. I mean, doesn't really matter that much. I actually think that the break above that prior high there are right around 119.15.
Mhm.
I view it as actually relatively more important because it's also a 2021-2025 fib, which capped really strongly last time that we were up here, and now we have broken through. So I'm really kind of looking at 119 or 515 rather than really here, technically for me.
And let's do a little bit of work here just so you guys can see everything. Now, remember, if you are following along via Forex Analytics, you guys have had this analysis all week. You guys are up. Just to kind of explain what happens is at the end of the week, our analysis gets deleted because if not, you'd just be scrolling forever and ever and ever. We've done that since the last 10 years, since inception. And then what happens is we add analysis throughout the course of the week. There's, all of us, here at Forex Analytics are adding analysis throughout the course of the day. You guys can see what the timestamps when everything comes out. We upload the charts. This is like Kman's chart that you can see right here in his analysis from this morning on the euro. By the way, if you guys are not signed up on our newsletter, if you go right to forexanalytix.com, right in the middle, it's free. It says something big is coming. Trading analytics is going to be coming in the next several weeks. It is going to be launching in the next several weeks. If you want to know about it first, because it is going to benefit every single person that's listening in here. I can guarantee you, everybody listening in will benefit. No purchase required. Let's just put it that way. So make sure you put in your name, email address. There's just our weekly newsletter goes out, but there's gonna be some separate emails regarding trading analytics. Anyway, it kind of pertains to what I'm talking about right here, to the basic technical analysis that you're seeing in the euro or the S&P or whatever asset that we're looking at. But we've been talking about these levels all week, and I want to show you how important where we're at is on the euro, because if you see that we were in a triangle formation, there's two logical targets for a triangle, right? You have your minor and then your maximum target, right? So if you take the minor target, we actually reached it. That was the reach above 120 to 120.80. That was your minimum expansion from a triangle. The maximum expansion from the triangle actually is going to take us above 190, or 122.50. So that is still in the cards. However, we did reach for channel resistance. We're holding it. There's a big longer term symmetrical triangle. It's in black. You can see it right here. We are back below it. So you can see we're knocking our head up against resistance. Overshooting is not abnormal, especially when it comes on the heels of some comments from President Trump. So you can't rule out we could actually get a reversal from here. But very important pivot today for the dollar. I think it all rests on how today really evolves, whether we end up breaking out or reversing and really holding this 120 level. Ryan, there are also, if you're looking along our platform, there are some options that are expiring today, and I know you look at the board, you report them all here on Forex Analytics. There's some big options expiring around here. Anything that should get our attention?
Not really. These will all expire obviously before the FOMC. So if there is any trading around that, we'll see that in tomorrow's expiries. But there's not a huge amount in that. But one thing I just want to point out, you're talking about the euro dollar, and is this dollar move done? You can really compare what happened in the euro yesterday to what happened in silver. We were already in an extreme move, and then it just went even more extreme, and we had the volcano erupt, and it ran up to 118. The same happened yesterday with the euro. You know, we had a low yesterday of what, 118.50-ish, and it traded all right to 120.80. The same thing. If you look at silver, and I marked this out from yesterday after we had those highs, you've got to watch what the price does after. Can it get back to those highs? Is it going to struggle getting back up there? And it has. We couldn't get as far as those highs. What's the high today? 113 something.
Today 116.10.
116, yeah, 116, and it's come off a little bit. So for all the people who are thinking, has a move finished, you've now got some markers up near that 118 and 116. You've got two levels there now, which you've got something tangible that you haven't had for the last, $30. And the same thing could happen in the euro. If we go through 120.80 today, then we're obviously not done. But if we get to, 120.40, 50, 60, find a top there, can't get up any higher, then that tells you maybe this dollar move has done. So, we can guess whether a move is done, but the price action, as it's shown there in silver, as it may show in the euro dollar and every other dollar pair, is gonna give you the clues and the signals of how to trade it.
And speaking of which, the euro is down 80 pips on the day right now. It's really come off. It started in Asia and it's been bleeding all through European trade. And I think as North American traders are stepping in, going, oh shit, man, we're well below 120 now. So we are starting to see, we're continuing to see a pullback in the dollar. I don't want to keep this all dollar related, but I do want to talk a little bit about the Canadian dollar, because the dollar CAD is at really critical support, guys. If you guys haven't seen it, these are the lows from June of 2025, this last year. But more importantly, it's the price action that followed this weekend. President Trump, he's like, we're gonna impose 100% tariffs on Canada if they continue to do a deal with China, basically. And the market obviously looked right past it, right through it, and said, yeah, prove it. You're not going to do that with Canada. It's just not going to happen. And so the Canadian dollar didn't weaken. It actually held up. It held its own. As the dollar has weakened, we've seen the dollar CAD slip. Even with the dollar firming against the euro, the dollar CAD is staying heavy, which, if you think about it, and then obviously Carney and Trump, kissed and made up yesterday, and then the Canadian dollar really started to firm as a result of that. But look at how weak, or you could say how strong, the Canadian dollar looks right now. And it's not just the dollar CAD; it's you can look at the euro CAD as well. I mean, that euro CAD has shown a big reversal over the last 24 hours. We have the Bank of Canada coming up a little bit later. Ryan, is there anything that we should be focused on with the BOC today? Because they're not expected to cut rates.
It should pass by without much fuss, I think. But we were talking about this on the Flow show. This is one of the central banks that cut rates, got rates down to where they're happy with, maybe keeping a little bit in the tank left over. The data has started firming up a bit. The jobs market is looking good again. Inflation's still looking a bit sticky. So, they're in neutral, but the market perhaps might be looking at whether they're going to be neutral to maybe a touch hawkish rather than neutral dovish, if you get my drift.
Yeah, sure thing.
I think that's the risk for the BOC.
Yeah, and I mean, if you look at like the Fed and where what's the term I'm looking for, where they believe that the rate should be, oh boy, it's too early in the morning. Neutral, thank you. Yeah, it would be probably about 75 basis points lower right now, and the Bank of Canada is basically there. So, Kman, you have anything else you want to add about the Bank of Canada?
No, that's what we said on the Flow show, and they've gone to neutral last meeting from a dovish stance. So now we will have to see. The nuances will be more important than the action, because they should stay on hold right now.
Got it. Just heads up, guys. Tesla reports after the close. You can see, is it a double top, or is this just a 24% retracement before we take off in new all-time highs? Keep an eye on Tesla. Microsoft, a very, very it has had a really big sell-off. Nice recovery though. I hadn't looked at it in the last 24 hours. Really nice recovery. Where you could say that was a pretty much a range extension completion, pretty damn close. You know, horseshoes and hand grenades and technical analysis. It's all, you know, close matters and it counts. So yeah, that was basically a double top range extension, found support, and I think that's going to be pretty critical support for Microsoft. As we head into earnings after the market close. You can see it's, you know, pretty big support there. And let's take a look at Meta. Meta has also been one of those, you know, hard chargers that kind of reversed as the whole AI craze is kind of subside a little bit. I would say that with Meta, you probably have a symmetrical or close to a symmetrical triangle developing here. Something that looks like this, maybe like this, but you can see that it's tightening. We're in the apex of this consolidation. A breakout could be brewing, and then you know, last but not least, of the big names that I'm following, then you have IBM that also is just, you know, pulled back to a 38% retracement. It looks like a nice little support here, but if that breaks, you know, that would be a risk to the IBM bullish narrative. But at the same time, it's still bullish. This has been only a 38% retracement. And then also, I'm just going to really quick take a look at the S&P because I was looking at it with you guys when it first kicked off the show, but now we've pretty much doubled in, you know, viewers that were here when we first started. So with the S&P, you'll notice that we are at trendline resistance. We triggered the stops above those highs as expected last night in our analysis, and now we're coming off a little bit. I would say support is right here. This is the gap from Sunday, right? This is or was it last Sunday? The Greenland Sunday. Greenland. We're gonna take over Greenland's Sunday. That was actually 2 Sundays ago. That was the gap. You can see how big of a pivot it has been. And I believe it's going to be support on the way back down. So you're in this like about 150 S&P point like trading range, you know, break above highs, we're going to accelerate. You know, if we break today's highs, we're going to accelerate higher. We break, you know, that pivot that you see here about, let's just call it 69.50. I had it at 69.45 as we've written it, you know, and the S&P analysis would be right here. Yeah, the 69.45, excuse me, that 69.45 level. We break below that, and I think that's going to open up some downside. Just so keep in mind that we have such big earnings today. Plus, we have Apple tomorrow. We have Visa, MasterCard tomorrow also. Really important from a consumer consumption standpoint. You know, and by the way, we did get Starbucks today, which is another consumer-related stock that is worth noting today. All right. Do we have data coming out right now? You should need to double check. We don't.
Nope.
I don't. No, we don't. I forget. I remember from yesterday. But we do have the Bank of Canada coming up. We're going to bring on Ben Maldonado here in just a second. But before we bring him on, Ryan, you know, it's obviously it's been a busy 24 hours. What's on your radar today? What are you looking at? Because I'm gonna tell you guys what I'm looking at today, but I'm gonna hear from Ryan and Kman first. So Ryan, what are you looking at today?
A couple of things. I'm going to be keeping an eye on this support in dollar CAD. I'm probably not going to.
Damn it, that's mine. No, you can't talk about that. Find something
Get
else to talk
off.
about.
Get
No,
off.
no, that's mine. I called it.
Too late, hey, too late, guys. It was on my morning BTs. So
Gosh damn it.
Whatever you guys want to discuss, it was on my BTs this morning.
You know what? Screw this show. I'm gonna get mine first. All right,
No,
go ahead. Go ahead, Ryan.
I bought it here last year, so it was
all right, fine.
Anyway,
dollar CAD. What are you doing?
Yeah, big support as you said down here. So I'm keeping an eye on that, see which way we go and what the dollar does. The other thing is S&P. You know, 7K in the cash market. I know it's been there in futures and whatnot, but the real market or the real pricing could hit 7K today, and if we break above there, then it could have some legs, and on we go.
All right. Yeah. Who are you to say what real pricing is? How come it's not the futures? How come it's not the cash market? How come it's not the CFDs? Who are you, Ryan? I really want to know. All right, Kman, what do you think, man? What are you looking at today?
Ozzy, I want to because I reduced a little bit on the way up, and I would love to see a retest of 69, 60, 70, and that hold, because that could be a springboard
That'd
to
be
rally
right here, right?
again. For the rest, yeah, well, the usuals, the usuals. Interesting is that oils are continuing to push higher, so that may have a positive impact on Norwegian kroner. So maybe there a little bit of a reaction to the top side may give us a decent entry to perhaps go a bit short dollar Norway again. Just on my radar.
I mean, look, we closed above the 200 DMA yesterday. Today we
Mm,
continue to rally. I mean, we might be at 64.77 would be our next upside target, as you can see here from yesterday. I mean, crude does look really constructive, so I like that.
yeah, yeah,
And
because
I'm go
Trump
ahead.
Trump threatened again to go into Iran, right? Mm.
Yeah, that's also nice. If you missed the spike this morning in the futures, is from the True Social post. And I'm with Ryan here. I think there's big support here in the dollar CAD. We break it. I mean, this is like, you know, everybody always thinks that the dollar. I mean, when you see a big move like this, you're like, it can't go any further. This is support, so I'm going to buy it here. It's tight stop. But we trade through 135.30. The 161% extension of this last move comes in at 134.68. So there's a 60 pip like elevator shaft that I think is right below the market, and we've worked off some of these oversold. Look at the oversold conditions on RSI, so it opens us up back up for fresh downside if the dollar really wants to get rolling to the downside. So throw what Kman had to say with crude. Then you got Ryan and I both looking at the dollar CAD possibly breaking down. I think that's something that is potentially actionable for you today. And that's what we do here at the Face Show is we give you actionable ideas, but more importantly is if you're in the trades room, you can actually be following along not only with myself, you could be looking at Kman, what he's doing. Ryan, he's posting all of his trades here right there. You can see he kind of goes through all of his trades through the whole entire, kit and caboodle step by step, which, if you're not in a place like that where you have accountability and you have traders that are talking to each other about what's happening, then you're in the wrong spot, in my opinion, as a trader. So come join us. All right, Ryan and Kman, I want to thank you guys. Good luck at today's FOMC. I know I think Ryan's taking a vacation again today. Kman's going to be around for the FOMC. I'm going to actually be on Ninja Trader Live with Maggie Lake and Craig Shapiro. I'm filling in today, so I'm going to be jumping over there for the FOMC, so make sure you guys catch me there. Kman, thank you so much. Ryan, thank you.
Cheers.
Thanks, Blake.
Thanks, guys. It's been awesome rocking out with you. All right, we brought Ben Maldonado is here in the house. Hey, Ben, how are you?
Great, Blake. How are you?
I'm doing good. It's Wednesday. It's hump day, and I'm going to get to humping as soon as I'm done with you.
And I could tell you guys are loving the volatility.
Absolutely. What's not to love? We trade. We trade.
Exactly.
I trading in 5% euro vol. When you're in an environment that looks like this, sucks.
Yep.
When you have 1 month vol that's at 5%, it sucks. But when it's at 8%, it's rock and roll time. So we're gonna get to humping. So what's happening with you, Ben? I mean, you've been I haven't heard from you in a while. I see that you're on quite a bit on other shows and stuff. But you've been talking about I know fourth turnings. You like to look at cycles, and the stock market continues to blaze into new highs. Is the stock market ever going to stop here?
Yeah, I mean that's the multi-billion-dollar question, right? In terms of market cap. So I think we're getting close, and I'll show in the presentation. I'll show some GAN timing that's coming up, which is really interesting to me because it's got monthly and weekly timing. It's not like a 5-minute chart or a 10-minute chart or anything like that. This is big long-term timing that's coming in. So we'll see. A lot of the big cycles are kicking in. For years we've been talking about gold and silver, and you see what happened there based on this sort of lack of confidence and sort of tearing down the current system that we're in. So let's
Right. So it's seeping in now, and it's showing up in certain aspects of the market, but equities still continue to blow the doors off things. Now, real quick, and I'm gonna pass it over to you. You know, it's interesting. You think about, like, the like all the like precious metals going higher, blah blah blah. You listen to people like Luke Gromen. Luke Gromen thinks that the market's going a lot higher than where it is right now. And when you're in an inflationary environment, one of the things that inflates are equities,
Mhm.
right? You could see it on a much larger scale, or you go a smaller scale on on other in other markets. Whether you're talking about Argentina or whatever. So, for anybody who's a bear in equities, it's like, and look, I'm the first one to be like, okay, I want to see the equity markets sell off a little bit here, but boy, it has proved a lot of people wrong, hasn't it?
Oh, 100%. It just keeps going. And the key thing I think is you have your cycles and it opens these windows and you look, but if the technicals are still bullish, I mean, it's suicide mission to try and short it.
Yeah, I mean,
So,
lots of doom and gloomers have been put through the ringer over the last couple years. So let me go ahead and let you take over a chart here and take over the screen, excuse me, and let's see what you got.
okay. All right. Can you see that?
I can.
Okay. So today we're going to sort of do a quick review of what we can expect for 2026. We're almost a month in. What are the main themes cycle wise that are going to show up? And then at the end we'll correlate that with what markets we should look at and how to take advantage of that. Of course, we're going to talk about silver and gold. Everybody's talking about silver and gold, so we'll talk about that. I've got a candidate for the next potential silver, and we're gonna look at that and sort of see if that makes sense to people. We'll go over the Gann price and time analysis that I was telling you about. We're coming into squares here, big time squares that again, it doesn't mean it's going to stop at 100%, but it sure means you got to like look both ways before you cross the street. And then we'll hit the highlighted markets that can take advantage of some of these cycles that we're experiencing.
All right. So now, when you're talking about GAN and timing, you're talking about longer term. Um, so, like, I mean, time frame. When you're talking time frames, talking weeks, months.
Weekly and monthly charts, yes.
Okay. All right. All
And
right. All right.
we'll get to that so everyone can see it. So
Okay.
what are one of the main themes about this year, the 2026, is it's all about the tribe and the tribe that you consider yourself in. And because of that, societies within societies and countries and around the globe, we're all becoming more separate. In other words, we're getting more entrenched in whatever camp we identify with or the ones that we think are the group that we want to associate. You can see it happening here in the United States. It's happening all around the world. And the thing that's disturbing, and it ties into the wars and conflict, is there's no interest. People have no interest in talking to others that they don't agree with. So we're getting more fragmented and sort of more siloed in these worlds where I'm only looking for content that I agree with. I'm only going to talk to people that I agree with. I'm going to shun everybody else.
That makes a lot of sense. I mean, I'm in the Arizona Cardinals fan camp, and I hate Bears fans. I mean,
Right,
like, literally, or if you're a Steelers fan, you can go kiss my ass. I'm done
right,
with you.
right.
Yeah, no, I get it. Okay, continue. Sorry.
We're seeing that for sure. In and the thing that how does it translate into the markets and economics? It's hard to do business and it's hard to manage relationships and navigate relationships when this sort of theme is underlying, is sort of your background weather. Like it's hard to stay dry when it's raining. And I think it's going to make doing business tougher, internationally, locally, and having relationships. We've seen families busted up where, oh, you voted for so and so, so I'm no longer speaking to you, even though you're my brother or my sister or my mother or my father. That kind of stuff is happening, and it's only creating sort of a more difficult environment to see sort of growth and cooperation. To do business, you got to cooperate, right? You got to come to an agreement. And if you're in one camp and they're in the other camp, politically, religiously, whatever, however the metric you're looking at, it's going to be really hard to do business. And
So,
and
and jokes. I'm not joking at this point, but U.S. is becoming more and more isolationist, if you will, due to the recent policies of the Trump administration. How's that going to really? I mean, it's obviously going to have big ramifications over the next several years. But what does the repair process post Trump look like? Is there one? And how about if we have like a quote unquote continuation of Trump? And let's say whether it's a JD Vance or whoever, how difficult is that going to make it for Americans versus the rest of the world?
I think it's a great question, and the overall theme of this huge, 400-year cycle that we're ending and starting the new one in the next year or two is everything is going to be smaller, more local, more tribal. So this era of globalism and I'm doing business with people all over the globe, and I'm going to put my supply chains in different time zones and things like that. All that's changing, and it's changing to where it's going to become more local. So isolationist is one thing because we're moving from sort of the global to the local. So everyone says, "Oh, that's an isolationist policy," when really it's getting back to smaller and more local. And I think one of the interesting things about studying the cycles and having them as a lens to watch events happen, a lot of people are like, oh, if it just wasn't for Trump, this wouldn't be happening. And as a person who studies cycles, I look at it the exact opposite way. It's because the cycle is happening that Trump comes about. So it's
Yeah,
it's not Trump makes the cycles make Trump. and
got
we're
it,
getting
got it.
and we're going to get leaders like that, and you can see it happening not just here, but starting around the globe. Now you're getting more leaders that are like, hey, it's Poland first, right?
Right.
And they're doing well, right? Because they didn't open their borders to immigration, and it was sort of, let's keep this local, let's keep it small, not open to the world. And so I think that's the background weather you have to sort of look at things through, is that global is not supported anymore and local is. And so that's going to be the thing to watch. The last one I think is the most dangerous thing that's going to lead to the conflict and war, is this attitude of we are right and good and the other side is wrong and bad. And I can't tell you how often every day you hear that, you see it in the media, you see it in social media, you see it on the news, you see it anywhere you look. That's the message, right? The other side is evil, and we're righteous and good.
Well,
And that,
the only cure to that, Ben, is going to war. Because then,
yep.
when you go to war, we are all good and they are evil, right? So, if you want to bring this country together, you just go against Iran, right? Is that a solution for
And
the
that's
U.S. administration?
and that's part of the reason why the chance of war happening is so much higher than normal, right? The
Right,
probabilities are
right,
off the chart right now.
right.
So let's go to the next one. The other thing we got to look at is economic headwinds. Now, this is one of the things that could derail the stock market, right? If the economy gets bad. Well, why potentially is the economy going to start getting bad or have trouble? Part of this sort of isolationism that you talked about, and the tariffs and all the tribal disagreements I have in parentheses here, is we're going to see reduced levels of global trade. I mean, tariffs are a tax. Taxes reduce the use of whatever you're taxing. So we're going to see reduced levels of trade. Is it going to be made up by local trade and local commerce? We'll have to see. But the disagreements with, well, we're not going to trade with them. And a perfect example is the U.S. telling telling Canada, you can't trade with China. You can't do that deal. And that's the kind of stuff we're going to see, which is not supportive of, a booming economy. Of course, we're going to have we have heightened probabilities of conflicts, war, regime changes. We're into the first 30 days of this year, and we're already seeing that with things happening in Venezuela, the threats other places in Iran. There are going to be more wars and a higher probability of the U.S. being in a war. I heard you guys mention this a little bit briefly, but this is one of the things I think that really is underappreciated or under noticed right now is there's got to be some sort of AI CapEx hangover that's going to be hitting the economy. I think they said AI CapEx last year was responsible for over 2% of the growth in the 5% GDP number in the last quarter. If there's any slowdown there, or if there is sort of a reconsideration of the amount of money that's being spent on that infrastructure, that's going to cause economic headwinds. And of course, the debt. Debt is a drag on profit. Debt is a drag on cash flow. And the levels of debt, not only here, but all over the world, are off the charts. I mean, they're historic levels.
Ben makes a great point with capex, and if for those of you that were not around and trading and living through the dot-com bubble, which I traded through, quite aggressively in the late 90s through the early 2000s. There's still lines that have been laid from the dot-com build out that still hasn't been used to this day. And so that's the kind of stuff that, but everything's moving so fast, and technology is moving so much quicker than it was 25 years ago that it's even probably more pertinent today than it was, in the late 90s.
No question. But it's
Yeah.
the similarities. If you were around in the dot-com, the similarities are crazy. I mean, it just shows you like human behavior doesn't change, which is why we get the cycles. The
Right.
other thing I'll quickly mention about AI, one of the things in this cycle is because if we do get this reduced economic activity and growth, everybody's going to be looking for a solution. And what have we heard over the last 18, 24 months? AI is going to bring abundance. AI is going to be the big savior. AI is going to be the thing that makes growth great. One of the features of this cycle is the new and sort of innovative ideas that people put forward to solve the problem of reduced trade and reduced economic activity. They're going to fail. And if that does fail, again, it's not, cycles aren't 100%, but let's say we don't get the growth and the ROI from all these dollars that are being invested in AI, and that starts becoming apparent. That would be one thing that would knock the market on its ass. So we got to watch out for that.
All right.
Let's go to one that everyone probably understands and feels is there's an elevated probability that we're going to have a war, and something's going to start this year. The USA has been involved in major conflicts every 80 or 90 years. Go back and look at it for yourself. If you go back 80 to 90 years from now, you're at World War II. You go back before that, you're at the Civil War. You go back before that, you're at the Revolutionary War. I mean, it's a major cycle that we are going in. It's obvious that the cycle is affecting people who control those kind of assets because we're just seeing wars all over the place. Why are other reasons other than the cycle that we'll see it? Competition for resources, whether it's oil, rare earth minerals, copper, silver, gold, there's going to be competition for resources as long as there's humans. These ideological differences that we talked about with the separations happening, if you turn somebody else into a devil or a demon, you can kill them. If you consider them another human being, it's a lot harder to kill them. The economic malaise, if we get the slowdown, if we see, tough economic times, as Blake was saying, it's a way of distracting the masses. You go to war. Revolutions. It's obvious that 50% of the people in this country are unhappy with the leadership and the direction of the country. That is not a tenable situation. When half the people are pissed off, it usually results in some sort of conflict. Just take a look at Minnesota as an example of what can happen. And this other thing that I put is the theme of the cycles as well is every man for themselves. So when you have that as your impetus and your sort of feeling, again, it allows a war to be much more probable of happening and fighting being much more probable. 2026. This year is a #1 universal year in numerology. You add up all the digits of 2026 and you come up with a 1. 1 is new beginnings. New beginnings means something has to end for something to start. So if we look at the signal we're getting from the gold and silver price, it's basically saying the current fiat system that we've been living under is ending and something new is starting. And that's why I've been saying on X and in any talks I give, there's an elevated probability of a monetary reset happening this year. If we look at the last monetary reset was Bretton Woods, which ended in 1971, Nixon took us off the gold standard. That was 55 years ago. 55 is a number in the Fibonacci series, and there are Fibonacci cycles. And so again, this is a totally different way of looking at it. Just looking at Fibonacci cycles, it says the same thing, that there's going to be a change and a cycle is ending and another one beginning, as the whole epic cycle where we're losing faith in the current system. So, and last but least, this Nixon-Trump connection, I've done that in presentations previously. Go look it up yourself. Ask AI, what are the connections, the similarities between Nixon and Trump, and you'll get a laundry list. It's just kind of crazy.
It is crazy, actually. Yeah,
Yeah,
it is.
but it's there, right? And
It is.
again,
Yeah, I mean, it's wild.
so what we want to do as investors and traders is we want to be aware of these things. They're not the impetus for trading, but we want to be aware of them so we're not blindsided by possibilities and events. All right. Silver and gold. Anybody who's, I guess, over 40 recognizes what this is, right? This is from Rudolph the Red-Nosed Reindeer.
Yeah, it's the best television show in the world.
Yes, when the snowman.
I mean, it's all of us 50-year-old people's favorite kids show. In the month of December.
Oh my God, I still watch it. My kids are grown,
too.
but I still watch it. Anyway, so the song was Silver and Gold, and I want to read to you the first 3 lines and tell me if this doesn't apply to today, right here, right now. Silver and gold, silver and gold. Everyone wishes for silver and gold. How do you measure its worth? If that's not the perfect question for today, right? Because everyone's saying, how high can silver go? What's it really worth? Where can gold go? What's it really worth? It's all, and the focus right now, everybody's focused on silver and gold. So let's take a look at the charts and see what it tells us about where we might go here. So this is a monthly gold chart. The Gann square here is anchored in the low in 1999. What it tells me is 53.20 is a pretty significant price. All right, because that's 315 degrees up. We are also 315 months from the lows in 1999. So this is what's called a square out, right? And for those of you not familiar, when price and time are equal, it can provide a potential change in trend, right? So does that mean gold's going to stop here? No. There's no 100% in the market. What it means is if you're buying gold at these levels, you need to really be careful, right? If you're trading it, there might even be a short setup where we could pull back, to 4,900 or 4,600 and still be incredibly bullish. But we're getting to a point, and again, this is a monthly chart. This isn't 5-minute chart or 30-minute chart. This is a monthly chart where gold is potentially squaring out. And I wondered if did we hit it today? 5306. So we were close. 5320 this month would be a square out.
Interesting.
Again, it doesn't mean it stops. It doesn't mean it's done, but it means you got to take a look. Let's look at silver. Silver actually had squared out at the high. And again, this is a monthly chart anchored at the 2001, somewhere near the .com lows, where we've gone up dramatically, and we have a price and time relationship here at this 117 area. Again, does it mean silver's going to stop? Absolutely not. But it means at 117, you got to take a look, because I heard you guys talking on the show beforehand. Hey, if silver can't go up and make a new high, that there's going to be some sort of consolidation or pause or maybe even a pullback. And I think that's another spot where we are with silver. The ride has been fantastic. And what I was telling people, because we were buying silver in the 20s and mid 20s to upper 20s a couple years ago, looking for some sort of move like this, is when it spikes like this, you got to sell some, and you got to know that you're wrong. You're going to be wrong, because it's going to keep going. It's going to go higher. And that's kind of what we've seen here, is that anywhere on the spike that you sold, you were wrong. But hey, you got to take profits. If you're a trader, you got to take profits, and you put money in the bank. Here's my candidate for what could be the next silver. Now, why am I saying that? Crude's been a dog. You can see it's just been in this downtrend since the spike when Russia invaded Ukraine. We've had this down move. Part of it, my call is geometry. Part of it is cycles. In geometry, you have the squares.
Okay.
Go ahead.
I'm gonna have a comment here in a second regarding crude, but go ahead.
So when you use geometry, you can use the geometry of a square, which we have that, and you can see how it can help sort of give you a grid to define price action. But you can also put circles on it and watch the geometry of the circle. And the interesting thing about the circles is when you get 3 points lined up, that's when you say, hey, I've got a decent circle. And when it hits the edges of these circles, you get fast moves. But watch what happens. So here we got the fast move up. Once it breaks out of the circle, you get a fast move in the opposite direction. This was down into the COVID sort of negative crude thing. And then we went up, and then we caught the circle here, the edge, and we just followed this thing down. This month, we've got the first bar that's breaking out outside of it. Now, again, this doesn't guarantee that you're going to get a moonshot in crude oil. What it does say is there's an elevated probability that we're going to see big moves in the opposite direction of the move coming into this spot. And so, go ahead.
But you're pretty downbeat on like the U.S. economy, like overall. Like but wouldn't that translate to weaker crude oil? I mean, if we were to to really slow down as a U.S. economy, or maybe even a global economy, you'd think that crude oil would weaken. Wouldn't you agree with that?
100%. 100%
Okay.
agree with that. So
Okay.
there's the one camp of, hey, we could have economic weakness, which is bad for crude. There's another camp, which is if we have global war and it's in the Mideast, or there are actors that do things to sabotage the flow of oil or the production of oil in the Mideast, that's going to cause spikes in crude.
Yeah.
The other thing is, if part of this monetary reset, and again, this is my crazy theory, that there's no basis for it other than, looking at the different cycles going together. If part of this monetary reset is getting rid of fiat and now having currencies backed by commodities, maybe crude oil is going to be one of them. If that's the case, maybe crude's going to be part of a basket, crude and gold and silver and other sort of tangible assets. We're going to move away from the fiat, which has no value in and of itself, to something that's tangible. So those are a couple possibilities on why we could see crude spike. But time will tell, and technicals will tell, right? First thing we got to do, Blake, you know this because you're a technical guy. If you're looking at the Gann square levels, we got to clear 71. If we clear 71, we could head to 100. We clear 100, we can head up to 130. It's
Sure.
stair
Yeah.
stepping, and
Yeah.
that's
Yeah. And there are definitely things that could drive us higher. But it's hard to say if it's going to be geopolitical or not, and or if it's going to be, economic reasons for the move. It's hard to see, from my point of view anyway. It's hard to see an acceleration higher in, with global economic activity. However, there is the likelihood that whatever Fed governor that comes in, whether it's Waller or Rick Reeder or whoever it is, the incoming Fed governor is probably going to keep rates loose and possibly lower, meaning he or she is going to run the economy hot. And if we're running the economy hot, and there is no global whatever happening, and the rest of the world starts to run a little hot as well, that could be a catalyst that drives, and we could not even see any of these geopolitical risks and just have a global economy running at inflation rates of 3% or higher. Isn't that entirely possible as well?
absolutely. No,
Okay.
that's exactly why the commodity space, I think, is something you want to have exposure to. Well, let's quickly get into some Gann time counts. So time counts on Gann, 90 and 144 and their derivatives, their key numbers. They identify periods, again, depending on the chart you're looking at. They identify, could be days, could be minutes, could be weeks, could be months. They identify periods where a change in trend is likely and possible, higher probabilities. Well, the week of April 11th, we're 315 weeks from the COVID lows, and in this month of January, right now, we are 202 months from the great financial crisis lows, and those are both key time levels. So let's take a look at how those relate. We'll show you the charts, but we're also gonna dial in price as well. The weekly, and these why I said we still had, last time I was on in October, I said, I still think we got rally to go. I still think we'll make higher highs, and here we are where we're doing it. 315 degrees in price up from those 2020 COVID lows is 72.29, which seemed crazy back then. And we also square out, meaning we go up 144 degrees at 71.34 the week of February 20th. So that's less than a month away, about 3 weeks away. If we can get to 71.34, that'll square out. On the monthly, 71.71 would give us a square out from the great financial crisis lows. So there's targets all in this sort of, call it 7,100 to 7,200 area. And believe it or not, we're within a stone's throw of that right now. I guess on the futures right now, we're at what, 70.20? I mean, that could be in a day, half a day, we could do that.
Yeah, it could be post FOMC today.
Yeah, it could be today. You're absolutely
Right.
right. So here's the weekly chart, and it shows you where that square out would be, and then those two prices. This is just a visual. Again, this was set from the COVID lows. You can see how we sort of bounce between the boxes, and now we're heading up to this half square where, conceivably we could be squaring out if we hit those targets. And again, this is a weekly basis. It's not a short-term chart. Let's take a quick look at the monthly. The monthly, we're here in time, right? It's January of 2026. If we get, in the next 2, 3 days, or like you said, Blake, after the presser today from Powell, if we hit 71.71, that's a perfect square out on a monthly basis from the COVID low. I'm not COVID, sorry. This is a great financial crisis low right here. So those, again, does it guarantee it? No, but it's something to be aware of. We are hitting like big long-term timing stuff in the next couple months. What are the opportunities we see based upon on the cycles? We think you can short the home builders because the real estate cycle we're in the middle of that. Because of the war, we've been talking about buying aerospace and defense stocks and ETFs. Look at the commodities or hard assets for trade setups. The grains have been basing or correcting for a couple years now. They're setting up. I think private credit is going to be one of the things that has trouble. It's already having trouble, but that might be the contagion sort of thing. And fitting with your conversation this morning on the dollar, I'll show you why I think you can watch for some potentially long setups on the Dixie, on the dollar.
All right.
So
Well, okay.
here's the builders. Here's the builders. You can see we're making lower highs. We've reversed off of this 114 area and are heading down. Again, this is a weekly chart. This thing is rolling over, and I think we're going to see some interesting downside. Not great financial crisis type downside, but I think pretty good downside. Housing is not.
Ben, I'm gonna play devil's advocate here.
Go
How
ahead.
about if the Trump administration, does something to really, really bolster housing, which I think that they want to do. Whether it's giving just giving a push to the home builders to building more, to putting more supply out there, because we're all dealing with a supply issue. I just looked at housing, prices. They're still sky high. I mean, everywhere.
Yeah.
And so how about if they incentivize home buying in one direction or another? Because looking at your chart, it is trending from left to right. It's trending higher, and it looks like a triangle consolidation, which would be a continuation higher if we actually break higher. So
Yep.
could we actually see it break? I guess as a trader, where your risk is, right?
Exactly. You got to watch your risk. The answer to what you said is absolutely yes. Does that mean they can obviate the cycle? No, it just delays it. So I think the cycle will eventually take hold. But the whole point, what I said in the beginning is you can't blindly do things based on the cycle. You got to make sure the technicals support you. And
Sure.
so Blake said, if you're shorting here, you know where you're wrong, right? You take out that high, you get the hell out, right?
Right.
And then wait to reattack. Let's look at the aerospace and defense. This is a beautiful chart. We were talking about this thing back in here, and you can just see it's making higher highs and higher lows and just keeps pushing. Again, this is another confirmation that the people that are buying this most likely have no concern about the cycles or interest in the cycles that I'm talking about, the war cycles. They think it's mumbo jumbo. Why are they buying it? Because they see, profits and revenue and growth. And so this is a way you get confirmation from a chart that, hey, okay, there must be something to that cycle, right? Look, that's just a beautiful uptrend, and it's sort of starting to roof and accelerate.
All right.
Let's look at wheat. You could see the spike high that was made on the Russian invasion of Ukraine. We were trending down sharply, and now it's just a drift. And that's how these commodities go, right? When they start this drift and everybody gets bored and says, "Oh, I'm not looking at that. I'm not watching it. There's nothing going on there." I get focused because from these drifts come the big breakouts and the big moves. So, is this something that's going to happen tomorrow? Absolutely not. Is it something that's going to happen, in the next quarter or the next 6 months? Most likely, we're going to see a breakout and a decent move. But we'll know when, right? Technically, we'll know when, and it'll tell us when to get involved, and that's when we get involved. Here's corn. Corn is actually, a little better than wheat. Wheat has a long base. Corn, we're actually seeing a higher low here. We saw a first push up off of this low, and now we're sort of basing above this key level of 412. If we hold 412, we should be able to push up to 517, and we want to see us take out that high. And lastly is beans. And you can see what beans did. Beans had this long consolidation, like almost 2-year, 18-month to 2-year consolidation. We broke out above it, and now we pulled back and we're testing it, right? We're testing this, all these highs that held the price before. If we hold here, man, beans is going to go. And this number here, just so you know, for the weekly that we want to see it stay above is this 1060. We hold 1060, you know, it's 1283. That's going to be the next target. So beans, the grains are looking good in terms of basing. This is a private credit company, Blue Owl Capital. They've been in the news. I was talking about shorting it up in here, up around 21, you know, this 2021 area, and look at what we're seeing. The market is saying not all is well with this company in terms of their private credit portfolio. And if these guys are having problems, most likely the industry's having problems. Lastly, let's quickly get to the Dixie and tell you why I'm looking for long setups. This is a Gartley pattern, right? And this Gartley finishes off with an ABCD, and that's what this target box shows, is the sort of different levels that the ABCD could come to. You know, it's not just a one particular target. There's a box. We just pierced and have come into the box. So, and this is a monthly, right? This is not 5-minute chart. This is a monthly. Once we get, you know, on the lower time, on the lower time frames, like, you know, you can look at your 4-hour, or you can look at your daily. Once we get a low in place and see a reversal up, I think that'll signal that, you know, this Gartley has finished. And once a Gartley finishes, you usually get a nice strong move in the opposite direction.
Oh boy. I'm listening to you right now. Sorry, I was just typing out some of our discussion for our description for this video. But yeah, so let me ask you this about the dollar. You're looking for a bottom here, but we have seen, you know, this emphasis by the Trump administration to weaken the dollar, and which to my opinion is it makes sense. I mean, if you're trying to be a more industrial based economy in the years ahead, which is something that we've been lacking for, you know, generations now, you want to have a weaker dollar to be more competitive overall. It seems like the Trump administration is pushing for this, which, you know, like I said, to me, it makes sense, but you're countering that because of some technicals. But do you believe that the technicals are more pertinent than the overall macro backdrop and really, you know, the next 3 years of you know, Trump administration led economy?
I think you bring up a great point, and I guess it's like that at any turn, right? At the all-time high in any market, everything looks great, right?
Sure.
At the lows, everything looks terrible, like it could go lower. You know, it could continue going lower. I don't know if we're there yet. All I'm doing is looking at, on a monthly basis, this is pretty significant, right? This is a significant geometric pattern that has played out. Now it has to prove it, right? Price has to prove it. Price has to show me, hey, we're not making lower lows. We're kind of holding here, or we make a false break low and reverse. You know,
yeah, I was going to say, but we are trading at lows that we haven't seen since 2021 today.
Agreed. Yep.
You know, so yeah, and look, man, I hope you're right. I'm traveling to Europe, and I have a feeling the euro is going to be trading to 130 versus where it's at 120, like by the end of the year. So I'm facing a 10% decline in my buying power between now and the time that I go. So yeah. I hope to hell that you're right. But
I mean, the only other thing I'd say, Blake, that, you know, number one, the technicals have to show that, okay, a bottom's here and we can trade off of it. So nothing has appeared yet. The only thing that's happened is this pattern is completing. Then we have to see what comes after it. The second thing I'll say is if we do get into some sort of global war, is the money going to come to the US or is it going to go to Europe or is it going to go to China? Is it going to go to India? Where are those dollars going to go? Where are they going to be safest? Usually it's the place where there is not the conflict occurring.
Yeah, so go buy Aussie dollars.
So maybe Aussie, right? Something. I mean, who knows? But Aussie's not a really a candidate for a reserve currency. Let's look at more of like of the major currencies. Where's the money going to go?
Well, see, that's the point, Ben, because you can argue that like where's the money going to go? It's going to go to gold. It's going to go to silver. It's already gone there, and it's not. Those are the floats. I say float. You know, the overall exposure is just it's not enough to take all the dollars.
It can't absorb it. That's right.
Yeah, if you end up going elsewhere, you are in Aussie dollars, you are in Kiwi dollars, you are in let's say, oh, the war has nothing to do with Canada. You're buying Canadian dollars, and that's when those currencies really take off in a risk off environment, which is complete opposite of what traders have been used to for the last 25 years. So that's why, these cycles can be really interesting as things change, because the function of the US dollar may not be there the way it has been for the last couple of decades. That's my counter argument to what you're saying.
And your counter argument has a lot of weight because, again, part of the cycle is the old playbook's not going to work anymore.
Right,
so
right.
It's definitely there. Again, this is I knew this would be, controversial because you guys have been very negative on the dollar, rightfully so. And let's see, the technicals have to prove it. All I know is, okay, geometry's in place. Now I'm looking to see what's going to happen. What are the signs that tell me that it means something and it's not just going to blow right through it?
Gotcha. Well, hey Ben, we're bleeding into the Morning Edge show, which is for the Forex Analytics subscribers. So I'm gonna have to wrap us up here.
We're done.
If you guys don't follow Ben, what's the best way to follow your work, Ben, and on cycles?
There you go. There's my my X account.
All right. Fantastic. Guys, follow Ben. I've had him on Traders Summit back when I used to do interviews over there, and apparently I'll be doing interviews here. So I'll have Ben back probably in the next couple months and see where he sits as far as cycles go. So Ben, thank you so much for blessing our community today with your presence. We appreciate it. It's always nice catching up with you.
Thanks, Blake. I always appreciate visiting with you guys.
All right, guys.
All the best.
So yeah, adios, Ben. So thanks everybody. And for those of you that are Forex Analytics subscribers, I'm going to see you on the Morning Edge in about, give me about 2 minutes and we'll kickstart that over there. And thanks, Ben, again. You guys have a great day. Good luck for the FOMC, and I'll see you I'll be live broadcasting with the Ninja Trader folks over there.